So basically, this video is about how I took two trades this morning and I basically lost both. It was a short on EU and a short on GU. I lost both. I was being undisciplined, didn't really have a, well, I did have a valid setup, but I didn't wait for confirmation and all of that. So this reason why I took the trade, or the reason why I took the short, is based on my swing theory model on how I find my bias, but it's also based on TTrades fractal model and CRT, at least in this trade it was. So basically I came onto the charts pre-London, right? And I saw that price was bullish and it basically swept previous day's high on GU, and then on EU it didn't. It put in a failure swing. So that was already SMT, right? But for me, while it was the reason why it was a false SMT to me is because the swing that swept previous day's high and then the swing that put in the failure swing, failing to sweep previous day's high, it was at totally different times, like it was hours apart. So I didn't consider that really, but I was still looking for shorts after that. The reason being is because obviously after we get a sweep of a relevant level such as previous day highs and lows, or previous session highs and lows, we can then anticipate a possible reversal, right? So basically after price swept previous day high on GU, I did then get a valid SMT afterwards with EU. So basically what happened, you can see that on Euro USD on the left, price gave that 5-minute change in state of delivery, it then retraced up, and then it put in that failure swing or that lower high, right? But as you can see on GU, price basically tapped into a 15-minute bullish FEG, and then it swept the high, and then afterwards it gave that 5-minute change in state of delivery to the downside, right? So basically on Euro USD over here, price created a swing high at 8 a.m. Price gave a 5-minute bearish change in state, retraced, put in a failure swing or a lower high at 8:30. But over here on GU at 8 a.m. price created that swing high. Price then traded lower into a 15-minute bullish FEG, and then it basically swept 8 a.m. So this is the 8:30 candle. So it swept 8 a.m. and then afterwards I then got the 5-minute bearish change in state of delivery. So basically, um, in my mind, I was like, so now that I have expansion met with expansion on both pairs, and I got a 5-minute bearish change in state of delivery on both pairs with SMT on both pairs, I then want to wait for a retracement up, and then I want to see bearish PD arrays get respected, so then I can take a short. And I prefer taking an inversion FEG setup, so I want to take an IFEG setup. So I was basically anticipating that after I got that change in state, I would then see a retracement up, putting in a failure swing, and then I would take an inversion. So I would then wait for a bullish FEG to then get disrespected. So I was basically waiting for price on EU to respect this lower high over here and then trade lower, and I was waiting for a lower high to form here out of this 15-minute bearish FEG on this side, and then take a 5-minute FEG and then IFEG and then trade lower. But obviously you can see I didn't get that, and then price just stopped me out on both trades. So let's look for reasons why I lost. So you can see that I didn't get a 15-minute bearish change in state of delivery. I only got a 5-minute bearish change in state of delivery on both pairs. So as you can see that if we anticipate price to put in that bearish continuation swing after a retracement, I expect another bearish change in state, right? Yet I didn't get that. I didn't get a 5-minute nor a 15-minute bearish change in state. So you can see here what I mean. So basically, if I wanted to take a trade anticipating a failure swing would get created here, I would then wait for another 5-minute bearish change in state, which I didn't get there. And then here on this side, if I anticipate this failure swing to hold, I would have to wait for another 5-minute bearish change in state, right? Which would be the closure above the up close candles. But I did not get that there, and I did not get that there, and then I got stopped out, right? But what I did get was a bullish 15-minute change in state after the SMT failed and the bearish PDRS got disrespected. So if I move to the 15-minute, so this is 15-minute on GU, you can see here, price basically gave this 15-minute bearish change in state, and then price put in that failure swing, and then it went up. Obviously I expected that failure swing where I was going to enter to be over there. I didn't get that. There you can see I got another 15-minute bearish change in state over there, right? I got another 15-minute bearish change in state over there, and I got a bullish 15-minute FEG. So it traded into the 15-minute changing state and bullish 15-minute FEG, and then price skyrocketed after that, right? So you can also see on, let me go here, on Euro USD, you can see on Euro USD, I didn't get that 15-minute change in state of delivery, right? So if I want to see a 15-minute change in state occur, a bearish 15-minute change in state occur, I want to see a closure below up close candles. You can see I didn't get that. So when price traded lower, it was respecting this level here. So then I got that 15-minute bullish change in state. Price retraced in order to tap into, well, retest this 15-minute bullish FEG, and then price basically skyrocketed after that. You can also see, if you look closer, you can see that there is a 15-minute CRT over here. So basically I got a CRT level, or a candle 2 closure, out of a higher time frame key level. So I got a candle 2 closure on the 15-minute out of a 1-hour bullish FEG, and you can see that if I do anticipate that to be a long-term swing, I then want to look for a bullish change in state, right? So then here on the 5-minute, I got my bullish change in state there. Let's check on the 15-minute. On the 15-minute, got a bullish change in state there, and as you can see, when we got that expansion higher, what do we anticipate after an expansion? We expect a retracement, right? If we want to continue the trend, so then we get a retracement to test the strength of this protected swing level, or this long-term swing point, and you can see that price validates it as a protected swing level by creating equal lows there, right? So it will either be a protected swing level if price fails to reach it, basically creating a higher low and then going up, or if it sweeps it and then it retraces like it did over here. So it swept it and then it went higher, or in this case it created equal lows. So it retested this protected swing level and then created equal lows, and then it skyrocketed up. So then essentially there was a 15-minute change in state over here, bullish change in state, 5-minute bullish change in state over here. Price traded into it, but invalidated the bearish SMT and that bearish hourly CRT level that we saw on GBP USD, and then it just kept on going up. So you can see let me actually go to the 15-minute again. So you can see on the 15-minute, right, there's that bullish change in state on the 15-minute. Price traded into it, but as you can see, price also traded into that 15-minute FEG over there. So price traded into a 15-minute FEG while respecting this 15-minute bullish change in state. After what? After price expanded higher, it retraced, testing the strength of this protected swing level here after I got the bullish change in state. And then what did price do after that? Well, if you wanted to short, obviously you could see that I would anticipate a swing point to form here respecting this SMT level, or respecting the fact that I wanted that to be a protected swing level, and I would obviously want it to occur somewhere out of this bearish FEG. But you could see price basically came down after the retracement to respect this 15-minute bullish FEG and this 15-minute bullish change in state, and then it just completely went through and inversed that 15-minute bearish FEG where I wanted to see a bearish continuation swing form out of. And then as you can see, expansion, retracement, respect, expansion. Afterwards I got retracement again, and where was that retracement level? Into another 15-minute bullish change in state of delivery, or the respected level, into up closed candles, or down closed candles, sorry, and also into another 15-minute bullish change in state. So price expanded, retraced into a 15-minute bullish change in state, and then into a 15-minute bullish FEG, and then price just skyrocketed after that. So yeah, I will be looking to basically experiment with my model as well as the TTrades fractal model, because it looks like even if I wanted to short here, and I was wrong, there's reasons why I was wrong, right? So then I can also look for a reversal play on that. But yeah, I will be backtesting this and working on it. So yeah. So just adding this one into the video, this is basically on the same day. However, the setup occurred in New York session around about 4 p.m. So basically you can see, if you trade TTrades fractal model, if you trade CRT, you can basically see that on the left is the hourly time frame and on the right is the 5-minute, right? So you can see that price basically gave a candle 2 closure, right, and then candle 3 at retraced respecting premium, and then it went to the downside after that. So basically you can see that price had that candle to closure, right? It was basically expansion up met with expansion down. It gave that 5 minute change in state of delivery, and then you want to see it retraced up, right? And then respect premium bearish BD raise before trading lower. So basically it was expansion up. It gave that hourly CRT or candle to closure. Expansion down, giving that 5 minute change in state of delivery. It was actually a 5 minute and 15 minute change in state of delivery, so the price levels were aligned. And then it retraced up again. And why did price retrace up? It retraced up due to price trading into a bullish 1 hour FEG. So then price retraced up, and then it put in a failure swing, respecting the 5 minute / 15 minute bearish change in state of delivery, as well as price trading into a 15 minute bearish FEG. So then from there you can look for an entry model. You can take a trade off the next 5 minute change in state. So you can either take a 5 minute change in state trade, because once you anticipate that failure swing to form at a certain level, then you can look for another protected failure swing, right? So then we get a 5 minute bearish change in state, and can basically wait for another bearish change in state, or you can just take the trade, because the next 15 minute bearish change in state was only at the hourly internal swing, which is the swing low that got created out of the bullish 1 hour FEG. So obviously that would be too long, so then you can just short when I get the 5 minute bearish change in state, and then afterwards you can see price fell. And if you can see from my perspective, my model, this is basically a higher time frame buy sell model A, because price traded into a 1 hour bullish FEG, but it put in a failure swing, and then from there you can anticipate the failure swing to retest the strength of the internal swing, which is a swing point that reacted out of the bullish FEG. So you can anticipate that price will retrace to that level to retest the strength by either putting in another failure swing and then continuing higher, validating that level, the internal swing, as a protected swing point, or it just sweeps it and then continues, still validating it as a protected swing point, or it just displaces it and then obviously changes order flow from bullish to bearish. And in two of those scenarios, the trade plays out, because you basically targeting the internal swing. So if it sweeps the internal swing but then establishes it as a protected swing level by failing to displace it, only sweeping it and then continuing higher, it's still a protected swing level. Your TP still gets hit. Or if it displaces it, changing order flow, your TP still gets hit as well. You can also take a trade and target a low risk to reward of the anticipation that a failure swing might get created. But yeah, that's basically the trade. So